And there's no real interesting small caps this morning so far, knock on wood. All right, good. And back over here. Eh, So you can more clearly see that on this page here, wouldn't you say? Let me pull up the drawing tools. So we had the move from the prior day's close, yesterday's close, which was absolute bottom tick end of the day. And now we've retraced to this level. So actually it only looks like about a 50% retrace, if you ask me. And we can slap tools on there to get the exact measurements, but to my rough eyes, it's roughly 25. I mean, it's roughly 25%. I wonder if I can get that really. Yeah, see, there you go. It's about 25% retrace. Maybe we will zigzag up today and have a nice green day retracement beyond 50%. That would be nice. It does not necessarily change the fact that this was a huge catalyst day in the opposite direction and that now we may be in a downtrend for a little while, perhaps to double bottom back here. But a little bit of retrace is exactly what makes credit spreads and option selling work. Because while the market isn't sure on direction and it's going back and forth, now theta starts kicking in. In addition to if the market goes up a little bit here, we get that delta uh, positive move as well. But if that's going to go down again, then we use it for theta buildup. And then if let's say this is the way the market's going to go forever, let's say it was forever, then these would be your ideal trim points. But you could never, very rarely could you predict when those tops are going to happen because one of those times it's just going to go like this. And we're going to come back out of a base and make new all-time highs. So let's take a look at when is November 5? That's the election. When is November 5 in all of this? Like, how does that, where is that as a tent post? Let's see. November 5 is roughly right here. And most of these bases, as you can see, do not really last that long. This one went from like March, early March to mid-May. So that's one. So it's like 2 months in a week. It's like, maybe 10 weeks, a 10-week base right there. So we're talking about mid-July to beginning of November. We're talking, what are we talking, guys? One, you guys probably can do it in your heads, but I gotta draw it out. Two, three, 1, 2, 3. It's like 3.5 months from now. 3.5 months. So that's a long time for a base. So the only way we could not make new highs by then, which is a possibility, like now we go into a waiting pattern. Although it does seem like the market is continuously pricing in a Trump victory. But 3.5 months, let's take a look at prior bases in this bull run and the lengths of them. So you have this one here. which lasted from mid-July, the exact same day, basically. Mid-July until, and we popped out of it on, wow, like the second or third week of November. This is like almost seasonal at this point. So that's what you could expect, folks. That's probably what we're going to see. Here, I'll draw that out. Now, what I'm going to do here is I'm going to mirror what happened last year in July. This is why they say, what is it, sell in May and go away or whatever. Okay, and look at that fast right side reclaim. I mean, we hit a low, looked like things were gonna, people were scared, almost the beginning of July. And in 2 weeks, we reclaimed the entire right side of what took 3 months. In 2 weeks, we reclaimed 3 months. I mean, the speed of that move alone should have been you just pushing capital, should have signified and signaled to you to just start pushing your capital onto the table. Because even with a sputtering start, eventually it is likely that things were going to continue at that point. So what that would look like here is, let's measure this out. No, I don't even need that tool, just basic measurement. It was a pullback of 11% for 3 months. Let's see where that lands us over here. And it's not going to be exactly the same either, is it? No. But probably right there to mid-October, around 447. So now I'll draw that. This is what's already happened, and maybe we're pulling up today. Kind of scary looking when it's happening. And yet maybe this is exactly what we're going to see. Perhaps. So, be prepared for that level of possibility that for the next 3.5 months, the market's going to stink. It's going to go sideways and down. You could convert things to iron condors. You could open iron condors. Not sure I would recommend going call credit spreads unless we're in a bear market, but there might be a few stocks that make sense, maybe. But even then, I think you'll be fighting it, because in 10, 20, 30 days in that option spread where you're supposed to be waiting for it to work for you, it probably would eventually, whatever stock that is, show some bullish signs and fight against your bearish thesis. So not a good idea to short during a bull market. I mean, we're in a bull market. You want to be shorting or going sideways. Sorry, you want to be longing or going sideways. You do not want to be shorting. That said, it looks like IWM, the small cap market, is heating up. Maybe that's going on ice now too. Not sure, but it seems to be a rotation and from big caps into small caps. And this is a thematic, something that happens historically, cyclically at certain points. And our recent switch to focus on small caps and small capping, penny stocking, all that good stuff, is probably ideal and certainly is warranted. So anyway, you should be watching the markets thinking about this. This is the 3.5 month blueprint right here. You should be thinking about this. And then when the market doesn't agree with it, think, oh, wow, something different is going on here, right? So that's why it's important to be thinking of this and this blueprint possibility to know, hey, maybe it's even like it's getting worse. Okay, so then you think to yourself, okay, well, maybe we're going to either bottom out earlier and it'll be more of a V, Or we're going to go lower and we're going to have more than an 11% correction. Maybe we're going to double bottom this point here. Who knows? Or it goes the other way and we're seeing a lot of strength. And you should note that mentally that, hey, this base is extremely strong and much narrower in pullback than the prior ones. There's a lot of information that you can derive and wisdom you can derive from every passing day on the market and just analyzing like this. All right. So there you go. And we had those jobs numbers this morning, and that for some reason helped tick things up, and so did because they were worse than expected, and so did Taiwan Semiconductor Manufacturing Corporation Company, TSM. It is up bigly. Not too bad actually. It's completely retraced yesterday's move based on a very good ER report, which is better than expected. Didn't exactly create new all-time highs, but maybe it's going to kick something off here. Maybe it's going to kick something off, so we'll see. All right, we've got exactly 10 minutes before the market opens. And Onco is something in the small cap land that's up this morning, but see how it's faded under VWAP and kind of has very little hope of doing anything with VWAP. Well, maybe after the open it'll pop above VWAP, but the thing is, this is prior behavior. You don't really want to be chasing after anything that way down at that has failed so poorly and then down at the bottom is starting to show promise. It's not really promise. It's like fool's gold. It's like trying to make money in the sewer. You know, it's just it's not where you want to go looking for gold. There's better stocks than that. Yesterday, some of the top put credit spread. Here's the interesting thing. A lot of stocks yesterday pulled underneath the 40 mark on the RSI. So for those of you who remember taking that class, that master class with me on RSI, that should light some light bulbs on your head. In other words, a whole swath of stocks that we love for credit spreading or high growth stock trading or swing trading, their RSI numbers have pulled under 40. And you know what that means? It means that eventually they're going to tick up. And when they start to tick up, that can be an early entry. And with RSI, it can tell you that early entry really early. And as you've seen before, sometimes it's not always the bottom that you'd be getting in at. It can get back down there in 2 or 3 days. But it's valiant. There's definitely a valiant points to pay attention to and give things a try if the RSI start turning back up. I would wait a little bit towards end of day unless something makes a strong move, like maybe TSM will. But I would wait for the end of day or tomorrow or another day where RSI comes back over 40 and reclaims that 40 level for you to consider it a possible entry. But remember, you should only be doing those on stocks that have been hanging out between 40 and 100, right? Because you have that bias and we're just momentarily pulling back. So here, VST could possibly be one. Maybe today or in the next couple days, it's going to signal RSI entry. TSM definitely took a strong downturn today. If you got in, you'd be getting around a 50 reclaim, which is not bad, but it ain't the sweetest. So, and that's because TSM is just still quite extended, you see. So what else? What other stocks? And yesterday I got totally murdered on CEG. What a huge drop. And also ELF had a strong drop. Look at that. Just a huge right side drop for several days in a row on ELF. And this morning a little bit of bounce up, but you can see it did break under the 40, and today is probably likely going to be an instant reclaim. So that could be almost an instant entry on ELF for put credit spread. The ER is in 22 days. The runway's a little short, but not too bad. It's like bit of pretty good possibility that this is a good buy point for put credit spread, and that in less than 22 days you could hit max profit of 50% or more on ELF. And then CEG might do the same. CEG, as you can see, also curved down and broke down the 40 and could easily reclaim this morning with some strength. It's not quite as strong as, say, ELF. ELF's bounce right now, pre-market, is pretty good, which tells me that retail is bouncing better than energy. So let's go back to Kava, which also had a pretty decent dip yesterday. And no, that's not the case on Kava. Kava has actually weakened further and is showing relative weakness this morning. See, because it's lower, this orange line is pre-market level, and it closed over here. We'd expect to see some retrace. So you can expect Kava, for example's RSI to push down even further. And what does that mean? It means maybe it'll be time to buy in a couple days after that. However, it is below the 50 moving average. But with a PCS, it's so forgiving that whenever the RSI does flip back upward on Kava and reclaim, that entry could be a very nice, sweet low entry, even if it's going to be under pressure to move back up. ER is in 27 days on Kava, so any day in the next few days here, if Kava could give us a little signal from RSI, an advanced signal for entry, a PCS would be the way to go. I wouldn't want to be risking shares here below the 50 moving average. In general, don't even trade bullish on anything below the 50 moving average. But if I said that, and then you look at this, there's like 5 days below the 50 moving average here. Today was the first day. I mean, well, there were some closes, but yesterday was the first day below it on Kava. But so you can see that it's really the 200 being above the 200 that signifies bullish or bearish trend. And then the 50 just gives you pause, and it's an interesting level to watch. And I forget who said it, but one of the best traders, reclaim traders, swing traders of all time, said that you absolutely have to take any reclaims of the 50. Any bounces or reclaims at the 50 moving average, they said exactly this. You have to at least take the first bounce or reclaim of the 50. And in this case, Kava, that would be over here on Kava, or even back here. But you didn't even have those kind of new IPO. You didn't have the 200 moving average at that point, but you could see it was in an uptrend. But this one right here worked out, and Kava could be hitting a sweet spot for a long. And maybe it will be somewhat sideways, but with a put credit spread, that equals profit. So that's all good. But there's, of course, other names, hundreds of other names. I can see on our list, we got Roku. Roku's coming up off of bottom. ER is too close. It's not looking that bullish in bullish formation anyway. VFC, nah. Coin's been very active lately. Coin's been quite sideways since March, but with the put credit spread, it's been profitable. Unfortunately, ER is a little bit too close right now, so you have to avoid Coin. Palantir has been doing good for the first time in a long time. Since May of last year, Palantir has been on a run. It's been appreciating. And that was from a $5 level. I remember when I said I wouldn't be interested in Palantir until it gets at least below, I believe I said $11. And it stayed down there for a while. But now it's $29. Well, it's also hard to bet on young companies. You really don't know if they're going to last. They might last another 5-10 years. This is true, but but they may not last after that. And in order to go long term on anything like value investing, you need 5-10 year, well, maybe 3-7, but 5-10 year horizons and timelines. And so super young companies are not the way to go when it comes to value investing. So you might believe in Palantir and good for you, but it still has yet to really be a proven solid long-term company. But it's improving. It's improving, improving, and it's improving quarter over quarter, looking pretty good. If anybody has anything you want to ask or say, just type it in. But all right, see, there's the Onco with that bottom feeding push up out of the gutter grill a little bit, and now it's a reclaimed develop just a little bit. That could be a topside bounce. You don't know how that could come in the form of, for instance, that was support. 23.7 was support, and now it's turned into it should be resistance once broken. And in fact, it reflected perfectly off of that level. I don't know if you see that. So what was support that it got hit and bounced off of many times broke, and when that happens, support becomes resistance to the psychology of it. And that may be what's happening here. We'll see. You can sometimes get fake outs and moves around it and that kind of thing. All right, markets have opened. Ooh, I have to refresh my monitors here. Okay, markets are open. Everything's moving. So let's see what we get here. I'm not interested really in Onco, but we'll keep it up on watch. And is anybody in any pennies, small caps? Let me know what you're in. Let me know what you're in if it's a PCS as well. We'll take a look at it. Right. Onco is pushing. Nvidia is out of the gate pretty strong, opening gapped up over yesterday's candle. That's a really strong signal for bullishness on Nvidia. What does the RSI look like over there? Because I know it's really extended. Yeah, that's pretty low. I mean, it could easily reclaim the 50 right here, and this turn up would be the first real RSI dip turn up entry signal since April 22nd. So that's almost 3 or 4 months there, and would have been like entering at 78 for a run to 140, almost 100% run from the last RSI dip. So this could be an entry day on Nvidia already. Well, see what I'm talking about, a little bit of the delta thing, what I was talking about earlier, is that already just in delta move, just bounce, just mean reversion, really is what I'm talking about right now. I've already reclaimed 20% of yesterday's move in just mean reversion. So this is why with put credit spreads, you have so many things working in your favor. You have delta mean reversion, if you understand what I mean by that. That's kind of two complex terms mixed together. But you have delta, which is price movement, acting in a mean reverting manner or out there as a dynamic of mean reversion. And mean reversion is going to work for you so long as you have a strategy that allows you to stay in for a few weeks. And we do. And then on top of that, you've got theta decay. Theta decay to add as a little sprinkling on top of all that as well. All right, let's see here. How is the market reacting right now? We're opening right in the middle. I bet Bob is doing something with this crazy market. We've moved down the first 3 minutes of the market on growth. Now, if I go to QQQE, let's see if that's sideways. or down? Actually, it's down. So most growth stocks are down. Let's check out S&P 500. First 3 minutes have been moving sideways. Let's try just the value stocks in the S&P 500. Yeah, those are sideways slash slightly up. Now let's check mid caps. Mid caps are moving up off of the open, and then small caps. Small caps strong move up off of the open. So it continues to be taking off of the frothy big caps and even all growth stocks, and not really mids. Mids are going sideways, and then putting that money into good mid and small cap growth opportunities. Now that's going to be for high octane mega returns. Because basically what we're saying here is that the big caps have peaked, and the mega caps, of course, with them. And that as the business cycle goes into overdrive, it's time now to take some riskier bets. So we should probably see more money move into the market as well. As risk on becomes a theme, you should see more money inflow into the markets. And we're seeing that in small caps and mids, and mostly in small caps. So I mean, penny stocking is the way to go right now. So that might mean that Onco is moving. Let's go take a look. Maybe Onco is doing well. Actually, yeah. Woo. Oh my gosh, almost a full reclaim. Hey, I guess it's gutter ball for the next couple of months. There you go, Onco with a very strong reclaim move. Small caps doing well. I got into Workhorse yesterday, and it's not doing well off of the open. Let me take a look at this. You can see my entry and my stop. I'm halfway to my stop, so I have to see where that goes today. I'm going to take a look at my worst positions first. The Lucify, same thing. It's called Locify, but I don't give a shit. I call it Lucify. Kazuya is doing well. Yesterday, Kazuya had a pretty good day, and that was a good sign, and had a nice close. What I did and what I wanted to teach you, nice, Bob. What I did and what I wanted to teach you in tonight's masterclass, but tonight's masterclass is canceled, is how to do trimming, adding, proportionally, sort of equalizing your small caps portfolio, if you will, the portion of your portfolio that's in small caps at the end of every day, which you really should do because they're pretty volatile assets. And you should be looking at them at the end of every day and rebalancing them is probably a better word. Did I say equalizing? Rebalancing them according to their strengths and risks and weakness. So every day that will change because they move a lot. And so that's something I look forward to teaching you next week in next week's masterclass. Tonight's masterclass is canceled because the RNC finale will be happening at the same time. I believe Trump will be doing his big speech. And it's not canceled because I want to watch it and anybody else should be watching it. And there's a lot of eyeballs that are going to be watching it, but just because of that conflict and that not enough people will be um, tuning into the masterclass. Although probably you guys probably value that masterclass even more than the RNC finale. And I appreciate that. Thank you very much. But let's just go ahead and save it for next week, Thursday night's masterclass, and we will make it an even better one because I'll have done more preparation for you. We'll probably cover more topics and it'll be just more comprehensive. So next week's masterclass is going to be a powerful, powerful, full-blown masterclass on penny stocking, and we'll cover some of the most important nuances that will be holding most people back from being successful at penny stocking. Uh, One of the primary things, which I'm not even going to go into minor detail, but in a major way, we'll be covering in deep theory, not just little checkbox, is size. So it's not just that people oversize when small capping that blows their accounts up. It's not just that. Uh, it's nuanced. There's a lot of theory to it and strategy, and we'll hit it next week, and you'll start to see a major change in your success as a small capper. I can guarantee you that if you haven't had small cap success with small capping in the long run, I know everybody hits a home run every now and then, but if you haven't had long run success in small capping, I can guarantee you a big part of that is your size, but that's not the reason why. It's not size that's killing you. And we'll go over that next week in the masterclass. The size will kill you, but that's not what's killing you. It's not the size. It's another factor, much deeper, more complex, more interesting, and more powerful to master. Yeah, so yeah, carve that out in your schedules. Next week's masterclass for members only is going to be good. Let's see if anything else is coming up on the radar here. Laser. All right. Laser. See how on laser, you do have a big move off the bottom here, and then you have that pullback and then continuation, and you could probably have traded that. But what's important to note here is it's no big deal in volume. I mean, we've had a much bigger day before that. If I get that off screen, we can see there's probably a little bit of a push, but even that wasn't even bigger than that one, to reproportionize the volume a little bit. We do have ramping volume going on, so there's increasing money being pushed in. And remember that the higher prices go, if volume's going up with it, then it's actually geometrically proportioning the amount of money that's flowing into the thing. Because the same volume at higher prices is more money, but more volume at higher prices is more than more money. It's more money times two, right? So that's great. There's a bit of a volume ramp going on laser, but you can't really be that interested in it. This is a little bit of a lesson here. A learning moment is that because the moment that's kicked it off that I could see was not on a high catalyst. And the reason you're really getting into these things is because you're looking for mother freaking whopping huge supernova skyrocketing continuation moves after pullback. That's what small capping is kind of all about. And there was just not a big enough catalyst here. Looking back, that's great. It's a wonderful move. I mean, it moved from $1.40 to 220 at the top. So that's pretty good. But it's not great. There's a lot of opportunities there's a lot of small caps that do a lot better than that. So that's anyway, lasers on the Momo right now. Joby, that's something we're in. Joby's doing well. Excellent. All right. Having a nice strong move from the open. Momo way up on Joby. I just had something sell. Let me take a look into that. What was that? I had an order fill. Took out a piece of NAS. Okay, NAS may be going in our direction. Oh yeah, NAS is continuing. We're almost at a 1-to-1 on NAS, and I already have my profit targets set as well. We're going to cover profit targets as well in next week's masterclass. I mean, it's going to be quite comprehensive. If you don't attend next week's masterclass, I mean, you missed out on probably changing the category of level that you're in with regards to your mastery of penny stocking, small capping. Because next week, everyone who attends that masterclass has the potential to learn so much and advanced concepts about penny stocking that you should be able to run a successful penny stocking system from that point forward. And that's something that everybody should look forward to because the potential gains in penny stocking are phenomenal when the penny stocking market is hot. which it looks like it's turned. There goes NAS. And did you hear my order, Phil? I don't know if you heard it in the background. But there you go. It just took out another one of my profits automatically. NAS is on the move. And where am I on that? I'm at plus 40% return on NAS and automatically taking profits. And that is with shares. That's not options. 40% return in 2 days. And that, frankly, this is probably just a base hit. Maybe get two bases here. Maybe. This is probably just a base hit on NAS. Base hits pay for base losses. But the interesting thing is, because of the way size is proportioned on your trades, you never lose with extremely rare probability, you 500, 1,000 to 1, you never lose more than your risk level that you assumed to risk at. Like sometimes with the put credit spreads, for example, Randy knows this probably from some experience now, and some of you who have been doing the put credit spreads. Sometimes 100%, minus 100% where you're supposed to exit becomes minus 140%. Sometimes minus 170%. By the time you're getting out, it's minus 180%. On rare occasion, I've gotten out at minus 240%. Now remember, if we're going for 25% ROC on those, then the worst loss we could take is minus 400%. We're talking about max profit numbers here for those of you unfamiliar. And but with small caps, you rarely ever see a loss of more than the risk level. So that'd be the equivalent of the minus 100%. It just never happens. And you're usually able to scale out before that. Just never happens. However, on the contrary, you're able to, this is where you get the kind of skewed, what do they call that? Skewed curve, skewed bell curve. On the contrary, you can get 10 times the return, 20 times the return. On some rare occasions, maybe once every year or once every 2 years, 100 times the return you could capture on the flip side of your risk level. So we'll be talking about that in next week's masterclass and how to exploit that and sustain that so you can be successful with a penny stocking portion of your portfolio. Some people just do it full blown, full times penny stockers, and they do quite well. How do they do well? I'll show you. All right, next week's masterclass, members only. Come join the group if you're not already out there watching. Click the link in my bio, join. And next week's masterclass we'll be doing, you'll be able to come on in and learn that, members only. What can I say? You guys deserve it. Alrighty, what else do we have? Still only Onco, SLRX with a little bit of momentum. By the way, we should check in on Onco. Maybe Onco is just going nuts. Maybe it's halted. I don't know. That was a pretty strong right side reclaim at the open there. No, SLRX, nothing interesting there. Onco, okay, so it broke pre-market highs, which is definitely a level, 0.28, but it's been a little rough since then, although it has made progress, but it's been a little choppy, and hey, that's the way it goes sometimes. If you were to risk to 22 cents or even 18 cents, which was pre-market low, 18 cents, you could probably stay safe and see where it goes. So Ben says, going back to the courtroom, LPA dipped. Oh, you did? Okay, LPA dipped. Let's see. Oh yeah, LPA is at the bottom of my PL day sort. And let's take a look at that. Yeah, bit of pullback. However, it has made a lot of progress, and I am in since 17, and I've taken partial profits. So we'll see where that goes, and I will rebalance at the end of the day, however it needs to be, or I'll take action sooner if need be. Okay, we're 18 minutes into the open. Lucy, first green day, it came up on my scan just now. Let's see. No, that's not true. So sometimes the scanner just misfires like that. CGC, this is one we're in. What's it doing? Okay, CGC is starting to make that move to the breakout. So we got into this, I believe it was yesterday or a couple days ago. Let me see when my trades were. Yesterday, we got into CGC on this recent activity going on off of the lows on this marijuana stocks, and I don't know. I'm guessing that some of that had to do with that Trump could be killed, and that a Biden marijuana pot smoking administration uh, could go into overdrive. I think that might be part of it. You know, long live the potheads, I guess. And so I guess the probability of that has gone up. And so there we are. We just hit a new recent high, 1 month recent high on CGC. Now I don't know if I even have my take profit points set on this, so I gotta look into this and set them right now. Let's see, because it's time. It's possibly time to do so. Okay, first take profit should be at 819. So I will set that on CGC. LPA has bounced a little bit. 819. And good to cancel. Okay, good. All right, set that there. And might as well, while I'm in here, I might as well set a few more targets. Take profit targets. 878. We'll be going over how I pick these levels in our masterclass. 901. So I'll just go 899 on that one. 963. You just set these up and then you don't have to think about them. You just wake up and they move. You just wake up and you hear the thing go bling. And then finally, 10. So 999. So is that where this is all going? 10. I think CGC is eyeing 10. I think that's what's going on here. How long will it take to get there? I don't know, but I'm gonna say maybe 5 days. It's sometimes I overestimate, sometimes I underestimate. So we'll have to see where that goes. All right, the markets are pulling back a little bit more. That is probably that's what we expected anyway. But IWM, let's take a look. Yeah, so small caps are flying though. The whole market is small caps right now. Yeah, the action is over on small caps. The opportunity, I should say, is on small caps. You should freeze your capital on the mega caps. You should be out of. You should be taking it all off the table, and mid cap, big caps as well. And then value and mid caps are holding, and then small caps are where the action and the opportunity is at the moment. There's some opportunity in things that are holding as well, mid caps and value. And I haven't really even analyzed gold lately, or Bitcoin, or oil, or rates. But there's also other macro opportunities there. All right, you guys. So I'm going to see you guys tomorrow morning, but I'll also see you back in the group who are members. See you back in the group right now. I'm going to go ahead and take my first break. And thank you for tuning in. Make sure you subscribe, follow, like, all that good stuff. Click the link in my bio. Lots of goodies and resources for you, best books, everything you can find. The link in my bio or wherever that is on my profile. And come join our Discord community for more, and to come into our master classes and to talk all day. All right.